What is happening in crypto? Bitcoin just smashed through $113,000, but the ETFs, they're bleeding. We've got massive liquidations, a surprise surge in Iris Energy stock thanks to AI, and is the whole market waking up? We'll break down exactly why Bitcoin's price is jumping while ETFs are seeing outflows, and how Iris Energy is making a massive pivot into the AI space, sending their stock parabolic. Plus, we're seeing altcoins like NEAR, DOGE, and AVAX catching a serious bid. Stick around, you don't want to miss this. Subscribe and hit that bell. Bitcoin breaks $113,000, but ETFs are bleeding. Bitcoin's price has finally surged past the $113,000 mark, a move driven by whales rushing to sell, even as the token's price remains down nearly 2% over the past week. David Seymour, CEO of Wave Digital Assets, explains this dramatic wave of liquidations stems from a perfect storm of factors. Crypto markets had become heavily leveraged after Bitcoin's earlier run past $120,000, and once Bitcoin slipped through key price levels, cascading stop losses and liquidations were amplified by thin liquidity. Simultaneously, stronger than expected U.S. inflation data boosted the dollar and curbed risk appetite, prompting traders to unwind positions. Seymour noted that short-term holders were quick to sell into the weakness, further accelerating the downturn. Meanwhile, Bitcoin ETFs are continuing their outflow streak, with data showing $466.7 million leaving since Monday. This risk-off sentiment is starkly contrasted by gold ETFs, which saw their largest inflows since January 2021 as gold itself hit all-time highs. Will this price surge hold, or is it just a temporary blip before more pain? We'll dive deeper into the whale activity and ETF trends that are shaping Bitcoin's immediate future. But before we get too deep into Bitcoin's price action, get ready for a story about a company making a radical transformation from crypto mining to AI domination. Bitcoin miner to AI cloud sensation, Iris Energy's explosive 2025 rally. Iris Energy's stock has experienced a parabolic climb in 2025, nearly quadrupling year-to-date and accelerating dramatically in recent weeks. Shares spiked over 12% intraday to around $47 on September 24th, following bullish analyst commentary, adding to significant gains earlier in the week. This rapid appreciation has brought heightened volatility, with options implied volatility sitting around 122, signaling a momentum tech stock profile. The company has seen significant bullish flow in its options market, with calls outnumbering puts, indicating investor confidence in further upside. The major catalyst for this surge is Iris Energy's bold expansion into AI cloud computing. On September 22nd, the company announced it doubled its GPU fleet to 23,000, pivoting a substantial portion of its data center capacity from Bitcoin mining to AI workloads. Co-CEO Daniel Roberts highlighted this move as a testament to their vertically integrated platform and ability to meet urgent demand, with pre-contracting ahead of delivery providing further momentum for their AI cloud business. This strategic shift positions Iris Energy not just as a crypto miner, but a diversified operator of next-gen data centers for AI, crypto, and beyond. Alongside its AI pivot, Iris Energy's Bitcoin mining operations remain robust, contributing steady cash flow. The company operates 50 AS of self-mining hash rate and can mine BTC at a low cash cost of around $36,000 per coin, making the mining segment highly profitable. Furthermore, Iris secured NVIDIA's preferred partner status for cloud service providers, potentially offering advantages in GPU procurement. They also closed new non-dilutive financing deals to lease GPUs, allowing for rapid expansion without issuing new equity. Wall Street sentiment has dramatically improved, with analysts racing to update models and price targets following the AI cloud pivot. This transformation from a struggling Bitcoin miner to a leader in AI megacenters has rewarded the market, with the stock up roughly 800% from its 2022 lows. Investors are pricing in high growth expectations from AI initiatives, with the stock's forward P/E multiple reflecting this optimism. Will Iris Energy's AI gamble pay off and solidify its position as a tech infrastructure leader? The market is clearly betting on it, but the volatility suggests caution for short-term traders. Now, as we see major players making strategic shifts, the broader crypto market is also showing signs of life. Get ready to find out if this is just a recovery or the start of a new bull run. Cryptos regain momentum as Bitcoin leads the charge. After a period of dawdling, cryptocurrencies are experiencing a decent bull session, largely dragged higher by a strong Bitcoin. Amidst a lack of major disruptive headlines, consistent ETF inflows, and a progressing regulatory picture continue to boost prospects for the digital asset market. A significant $1,000 day for Bitcoin has been enough to reawaken the enthusiasm of crypto aficionados, signaling that the current market-wide rally is far from over. Even as equities experience slight corrections from their intermediate highs, they remain close to all-time highs, maintaining an overall risk-on tone that is always positive for cryptocurrencies. Altcoins such as NEAR, DOGE, and AVAX have seen impressive performances in the past few days, pushing these popular names closer to their cycle highs. The total crypto market cap has slowed its correction and is eyeing a pushback above the $4 trillion mark, with traders watching closely to see if profit-taking exceeds previous records. Dogecoin has shown strong recent momentum, testing key resistance levels. While it experienced a correction back towards its main upward trendline, bulls are now re-emerging, aiming to break out from corrective patterns. Key levels to watch for Doge include support around the 50-period MA at 26 cents and resistance near previous highs. Solana has experienced volatile swings but has managed to re-enter its upward channel. Despite rejecting the $255 resistance, buyers are now focused on holding the $200 support level. The overall trajectory remains less bullish but far from bearish, with attention on RSI indicators for potential dip buying opportunities. Bitcoin itself has formed optimistic price action after weeks of correction, stepping in after testing the $110,000 to $112,000 support zone. A daily close above $113,500 could attract further momentum, with a weekly close above $115,000 to $117,000, potentially leading to a retest of all-time highs. This broad market recovery is a welcome sign for investors. But what about the established players and their recent performance metrics? And finally, we're looking at the big picture. How are Bitcoin and Ether performing, and what's the latest on those crucial ETFs? Bitcoin dips to $112K amidst ETF outflows and market shifts. Bitcoin experienced a price dip to $112,000 this week, marking its lowest level in 2 weeks, even as the broader cryptocurrency market shows signs of recovery. Despite this short-term pullback, BTC is still up approximately 19% year-to-date and remains about 9% below its record close from August 2025. This volatility is characteristic of Bitcoin, which, despite being considered a high-risk investment, demonstrates resilience. Ether also saw a significant decline, hitting its lowest level in 5 weeks and falling nearly 8% from the previous week. ETH is currently up approximately 24% year-to-date, but is about 14% below its record close from August 2025. The launch of spot Ether ETFs in July 2024, following the approval of spot Bitcoin ETFs in January 2024 by issuers like Grayscale, iShares, Fidelity, ARK21 Shares, Bitwise, and CoinShares Valkyrie, has introduced new dynamics to the market. While Bitcoin and Ether are the dominant cryptocurrencies, XRP, launched in 2012 and once a market leader, is also part of the ongoing market narrative. An index tracking Bitcoin, Ether, and XRP uses a logarithmic scale to better illustrate relative percentage changes and long-term growth, showing Bitcoin currently in the lead. The recent performance highlights a divergence. Bitcoin's price is breaking barriers while its ETFs are experiencing outflows. This suggests a complex market sentiment where direct investment in the asset might be favored over fund holdings by some investors, or perhaps a broader deleveraging event is at play. The contrast with gold ETFs, which are seeing significant inflows, further emphasizes the current risk-off sentiment among certain investor segments. How will these ETF flows impact Bitcoin's price trajectory moving forward? And what does this mean for Ether and other altcoins in the short term? Stay tuned as we break down all the critical market movements and what they mean for your portfolio. And that's your Bitcoin Bulletin Blast. We saw Bitcoin smash past $113,000, but ETFs are bleeding outflows. Iris Energy is making a massive pivot into AI, sending its stock soaring. Cryptocurrencies are regaining momentum with Bitcoin leading the charge, and while Bitcoin dipped to $112K, the overall market is showing resilience. Don't miss out on the next big crypto move. Smash that like button, subscribe for more, ring that notification bell, and follow us on all social platforms for real-time updates.